Hey everyone, in this video I've got some huge news for Carnival stock investors. Now, the company has been recovering strongly from pandemic devastation, and in this video I'm going to share with you some big news, and that news is going to come towards, we're going to build up towards the big item at the end of the video, right? So you're not going to want to miss it because it all leads to that ending big item. All right, let's get right into it. Starting with the company increased their guidance for the second half of 2023 by over 2.5 percentage points. That's substantially all of the second half improvement in net per diems, or price per booking, is driven by passenger ticket revenue on both sides of the Atlantic. So they've increased prices on tickets and customers are buying more than they thought, right? Remember from your basic economics class, when price goes up, demand goes down, right? That's the basic economic relationship. And that's what Carnival management was expecting when they raised ticket prices. However, the impact from the pent-up demand for travel is outweighing the downward impact of rising prices. So that's really good news. Now, that's not the big news. Now, let's keep going here. Adjusted cruise costs without fuel are expected to be up also 10 to 11%. So it's not just ticket prices that are up for Carnival, but the cost to operate the ship is also up by 10 to 11%. That said, the increase in ticket prices, management says, far outweighs their guidance increases, improving margins on the bottom line. So yes, costs are going up, but the revenue from higher ticket prices far outweighs the costs that are going up, which is leaving Carnival with a bigger bottom line, more profits on the bottom line. Okay? And that leads to the final and most critical point of this video, which is their increased confidence in the future drove Carnival to use a portion of their cash or liquidity to prepay $1.4 billion of variable rate debt that was going to come due later this year and in 2024, which combined with several other factors will reduce their interest expense for the year by over $80 million and leave them with 80% of their debt being fixed interest rates, protecting them from rising rates. Man, so much to unpack here. So let me get started first by the interest expense. So when the company was in the troubles during the pandemic and they had needed to shut down all the cruise ships, they needed to borrow money to stay afloat, right? They borrowed billions of dollars, and that increase in borrowing has led to much higher interest expense than the company would like. Every company has an equilibrium level of equity and debt, right? You might say, well, if a company is doing good, they should have zero debt. That would not be true, because when you look at the cost of capital, the cost to run a business, it's typically lower costs to finance your company with debt. It's typically lower to finance your company with debt. And on top of that, you get to interest expense deducted from your income, which lowers your tax payment, which lowers the cost of financing through debt even further. So for that reason, companies like to have some debt on the balance sheet. However, Carnival has way more than it would like. It was forced into this situation. So the company's mix of capital and equity, debt and equity, is off balance. And so there's a big opportunity to bring that back into balance, which will reduce the overall cost of capital for the company, which will have the impact of increasing valuation. Okay, which will have the impact of increasing valuation. Okay, so that's why this item is such a big deal, because not only is Carnival experiencing better than expected revenue and profitability, but that's having a double benefit, because that better than expectation profit is allowing them to pay down even more debt, which is reducing the interest expense. which is reducing the cost of capital even further. And so it's having a double benefit to Carnival, and that's why this is huge news for Carnival stock investors. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.